Hello, everybody, and welcome back to the Crypto Economy Podcast. Today, I'm very excited to have Mathias, the co-founder of Kairon Labs, with us here to talk a little bit about market makers. So, thanks for being here.
Hey, good morning, good afternoon. Thanks for having me. It's a big pleasure for me.
Absolutely, and I've been wanting to get someone that does what you guys on for a long time. I think this is a part of the market that's kind of like hard for a lot of people to understand. There's a lot of, I feel like,
Yeah,
demystifying to be done, and even the guys in all of my groups, barely, these guys who have been doing it for years, some of them still have a lot of misconceptions about how this stuff works. So I'm excited to just kind of dive in and, get people up to speed on, how this all fits together. So I guess just to get
great.
started, if you could just tell everyone a little bit maybe about how you got involved in crypto and why
Sure,
you decided to found the company and when.
sure. We go back since 2016, just like pre first big bull market, let's say, when everything really got blown out. We were looking at like the ETH, ICO, and these kind of things, and we were just like most people, right? Like very retail focused, chatting in Telegram, in private groups, and chatting with friends about it. And then 2017 came up, and then everything kind of took off. Me and my current co-founder, we actually quit our jobs when we were both working at TradFi, and we started like working with a friend that we knew from like when we were playing computer games in 2013. The guy was like Bitcoin, and he was able to put in make quite a good amount of money, and he started investing privately, let's say as a on his own, and let's say as a family office, and we joined it, and we started advising all these startups, scale ups, ICOs, everything on technology and tokenomics and exchanges and all these things. And well, very quickly we found out that market making was a very niche in its own. Like stable coins back then was not really known, right? Like everything was paired with BTC or ETH, and that was it. And these projects also didn't know how to manage it, right? So me and my founder Jens, we figured out like market making is something that is actually a necessity to crypto in general, or digital assets. So we started exploring, and we deviated from the team that we joined, and we said, okay, we're gonna start on our own. When we started, actually, was already the end of the bull market. And so we started mid bear market, very rough market for us to start with, and we just kept on grinding, kept on building, checked out what the needs are, and found out these gaps in the market where big arbitrage opportunities and need of liquidity in this bear market, and we just kept building out. And then, eventually DeFi summer came along, and we were ready for it. And we joined the run, and we were prepared for that run, and we scaled the company. So that's a bit our story, and how we came into crypto. It's been quite a hell of a ride for sure.
I feel like it is for everyone, but that's a great story and that's awesome. I feel like you guys hit it at just the right time, just when people needed you. So, what
Yeah,
was that
exactly.
process like with the first few clients that you found? I guess, how did you decide who they would be? Did you have some criteria? Was it just whoever shows up at our door, let's go with it?
No, when you start, you kind of take everything you can, right? Like you're so eager to learn and try and fail and retry and fail again, and that was always a bit of a mindset. So in the beginning, we literally took everything we could, right? And we learned a lot with that, about how we should operate as a business and be ethical in let's still which is still today an unregulated market. Um, and the let's say the things you really shouldn't be involved into, from wash trading to pump and dumps and all these shady market manipulations that still happen today in the market. So it was a big learning curve for us, and that still helps us today in doing proper due diligence. In the beginning, you take everything, and you don't really know what you're taking on. The more the more mature you become in the business, the better you can gauge on the qualities of these projects, the quality of the founders and the project team itself, and the exchanges and so on and so on. So now we're much more diligent on what we do. In the beginning, we literally tried everything that we could take on. Yeah.
Could you describe, I guess, some of the learnings, I guess? Because I know it's difficult. Like I've been dealing with a lot of other communities of crypto coins and meme coins. It's a lot of anons. It's a lot of, you have no idea who's
Yeah,
on the other side of the
exactly.
screen. You've got to figure out if the interactions are real, the engagement is real, who is, yeah. So like, what is that process? And I guess how have you learned over time to improve it?
You know, we've had situations with like projects like Anons, like you said, like they join a call and they have like uh, it mimics a voice, so it's not a real voice, but
Yeah.
it's like a robotic voice and these kind
Yeah.
of things. So it's just kind of sometimes a bit scary even to jump on a call with with those type of guys. But I think it really what you see is that you very early on whether a token project understands actually tokenomics. That's one thing. I think that's a very crucial thing. It's like the way a tokenomic is set up, you already know how advanced these projects are and how these founders are set up. Based on the tokenomics, you also know whether they're in for a long haul or for a short haul. And that's something that we've learned in the beginning, is that actually this is a crucial aspect in working together with token projects. That's one. I think two, regulation is coming our way. Kairon Labs is based in Europe. Micah or Mika is coming our way and is being enforced. And so, anons is not possible for us, right? We have very thorough KYC, we have very thorough AML, we make use of chain analysis to make sure that, everything that comes through us or comes on our accounts that, is checked and verified. And we do these onboarding calls always with webcam on, making sure everything is very checked and double checked. In 2016, everybody was like on Telegram voice messages and all this kind of stuff. That's over. If you want to do it properly, you need to do the right processes to make sure you have proper due diligence. So that's something, one, the tokenomics, to the just KYC and AML and seeing whether a token project or the founders are actually being able to deliver all these documents and what is necessary already gives you an idea of whether they are serious or not, right? So I think those two things are very crucial. I think the third challenge, even for very diligent founders that are, let's say, new to Web3 or digital assets, is the exchange aspect or the pricing of a token aspect. And so that's where we as Kairon Labs try to support these teams, these projects, to guide them through the Web3 flow, right? It's exchanges, it's tokenomics, it's about how does the exchanges work, and what is liquidity, and why do you need a market maker, and so on and so on and so on and so on. So that's, I think, the third step that is, let's say, part of the growth or the learning curve that we've gone through, and that's absolutely necessary for us. Yeah.
Yeah, no, that's super interesting. And honestly, just the camera on thing, I can tell you, everyone I've had on this podcast, I think pretty much we've had one rug, I think, but everyone else, like, you put the camera on, and there's something about that. And all the
Of
people
course.
who actually I've like invited on that were projects I was interested in who wouldn't come on, they all rugged. And I'm like, okay, that's how I'm testing it. Like, if you won't come, show your face,
Exactly.
talk to someone for free, why not?
Exactly.
So
Exactly.
sometimes it
It
can
makes a
just be that
huge
simple.
difference, right? It makes a huge difference.
And I think that's changing. It's, it's slowly people are
It
getting more
is.
comfortable, especially in the US. I think people are just now in the past few months, they're seeing celebrities launch meme coins and they're starting to feel a little more comfortable with all
Yeah,
that. So
exactly.
I think it's a good thing and the industry is maturing. So
Yeah,
I
for
guess as
sure.
you like evaluate these projects aside from the founders and the tokenomics, like what is, I guess, is there like a minimum project size that you work with? Do you need to have like $100 million market cap? Do you need to have 100,000 followers on Twitter? Do you have any of those, or is it really just a case by case basis? We are kind of like a startup investor where we really are evaluating where we think this will be.
Yeah, that's a good question. We don't really do these very like you need to have 100 million FDV or your market cap, initial market cap cannot be more than X or Y. What is crucial for us is throughout the process, working together with the exchanges and the token projects to understand how well of a fit this is in the market and whether this is actually really something people are interested in, right? But in general, we are a facilitator, right? We help projects to go into the market and we do mainly a due diligence on that tokenomic side of things, making sure this is a long-term play, and understanding what the incentives are for a token project to actually launch a token, right? These are the things that are for us important and something that we really want to understand as a liquidity provider for these projects. Sometimes we go even further and when we want to invest into the project, we're also in it for the long haul, right? So that's also something that we do is internally see if this is something we would invest into financially. Let's say put your money where your mouth is. So that's also something that we do, but we don't have any hard limits on like initial market cap or these kind of things. What we do, we are careful with is, let's say, start providing liquidity on these lower liquid exchanges that we are less familiar with. That is something that we are hesitant of, especially with what happened 2 years ago with FTX. Like counterparty risk for us is a very big thing. We are very cautious of it, and it's part of a big thing in the risk management on our side. So that is something that we always evaluate is when projects already are in talks with exchanges, we will very bluntly tell them whether this is a market that we actually want to participate in or that is not something that we're willing to go on just for everybody's sake, to be very honest. So that's also a criteria that we look at on our end. Yeah.
No, I mean that makes perfect sense. And I've been playing around a lot on like the Stacks network, which is a Bitcoin layer two, and
Yeah.
their biggest exchange just got hacked and they
Yeah,
just like
indeed.
ruined the liquidity. And I had a meme going on there and I had to deal with all that crap and it was a nightmare. So
Yeah,
yeah.
yeah.
Is there, I guess, do you guys work with DEXs or is it primarily centralized exchanges?
So yeah, on our end, I think if you look at decentralized exchanges, they're a good source of liquidity, and it's a very passive liquidity. If you look at centralized exchanges, it's very active liquidity. It's also cheaper to interact with. It's faster to interact with on most centralized
Yes.
exchanges. So for us, decentralized exchanges are a very interesting niche or liquidity that we tap into. I think from a regulation point of view, it's still very black box on who is providing that liquidity and you're taking liquidity from somebody that you don't really know who it is, right? So it's these kind of things that we're cautious of, obviously. So yes, we trade on DeFi in general and provide liquidity on DeFi and trade on DeFi, but we see more and more action on the centralized exchanges. the last year and a half, actually. More and more action on centralized exchanges for sure.
That makes sense. So do you guys have like a few that you partner pretty closely with and kind of drive, projects to like help them get listed and do things like that? Is it kind of set up in that way?
The exchanges are very cautious of this, right? You don't want any conflict of interest with the exchanges. I think that's super crucial, especially with the regulation coming and being enforced. But obviously, we have a preferred network of exchanges that we work with. When you, as a market maker, you're doing hundreds of millions, or if not billions of dollars every week on these exchanges, and you know them inside out, right? There's a change and you know what impact it has on your tech stack. So obviously that's a preferable course of interaction for us. So what we can do is suggest a token project, right? Like, hey, we interact with exchange A. We could give you an introduction through a forum and give some insights on our end, but that's more or less where it goes, right? So we also need to be cautious of that in general and make sure we don't overstep our boundaries on our end.
Yeah, that makes perfect sense. So are there certain exchanges that are more profitable for you guys to work with where they, cut you in on higher percentages of fees, or is it like pretty standard across the board?
It depends. Exchanges, they want liquidity. They want to make sure that their users can tap into your liquidity, and how we are incentivized is by trading fees, right? So the higher the volumes that we trade on, the lower our fees become, the more trades we can do, and it's like a snowball effect, right? Like it is something that we often use because it's only as an advantage for us as for the token projects or even these bigger altcoins that we are not officially a market maker for. And of course for the exchanges, right? We come in with liquidity, we come in with volume. It's only a win-win for them. So that's how, let's say, how we are incentivized is purely by trading fees. Obviously, when you're doing a lot of volume on these exchanges, you have also a direct contact with these exchanges too. For whatever reason, we have questions about technicalities or server updates or API updates. We have a direct line to discuss that and be informed by them firsthand. So these are the things that help us and that also helps us to build more of a partnership with these exchanges for us. So that does happen, and obviously also there we have exchanges where we do most volume. The most obvious one is Binance, right? That's let's say the end boss of all the exchanges or centralized exchanges, at least for now, within digital assets. And many others where we trade on and make sure that we provide liquidity and do our trading on our end. Yeah.
Awesome. Yeah, that makes sense. So a project like Mother comes to a firm like Wintermute. How do they decide like how much liquidity we're injecting? Are they trying to get to some ratio of liquidity where they're like, this makes a little more sense? Are they just like, let's put as much money as we can afford into it? Are you doing math on the fees and trying to, stay within a certain band? I guess. How do
Yeah.
you decide how
Yeah.
much?
Yeah. Of course, I cannot speak for Wintermute itself.
Sure.
They have their own business and their own set of rules that they implement. But it's a very common practice to look at actual trading volume, right? So, whatever top 20 coin that you would look at, and you would say, okay, we want to market make the coin, and well, they have $100 million of volume on a daily basis on exchange A. How much step would we need to put in to represent volume, to do trading volume, to make sure that they, there's liquidity 24/7 and so on and so on. So it's always relative, or not always, but it's very oftenly relative to the actual trading volume that is happening. And so that's always a big measure on our end is organic trading volume and how much liquidity we need to put into that. Now the difficulty is, of course, that you have very volatile markets. We've seen it last week, and that's where all market makers they manage their own book, right? You have X amount of hundreds of millions of dollars under assets under management. Well, in the end, we need to be a profitable business, right? So the market makers, they will provide liquidity, but there's always a sense of in the advantage of their own books, right? We need to make money, right? That's the core of the business. So also depending on volatile aspects as macro environment, last week, BTC price action, all these things come into play to define how much liquidity are we going to put in at any given time in the market. And this also changes over hours, right? US sessions, European sessions, Apex sessions. It is all very different throughout time. And so these are the things that we monitor very closely together with our algorithms, but also our traders. So this is mainly how it works. Also, if you do initial listings, you don't know how much volume is coming in, right? So also there we make sure that depth is relative to volume, and then we dynamically can change depth based on the volatility of the market. Yeah.
Oh, got you.
That's yeah.
That's super interesting. Okay. So you talked a little bit about like the macro. I guess, do you have teams of people who are, for example, looking at new networks like Bitcoin layer twos and then weighting it against, okay, maybe money's going to move over from ETH, or, as Solana really
Yeah.
had a moment, where you guys
Yeah.
out ahead of that looking for early projects. And I guess, how do you balance, I guess, the old and the new and decide when it's time to really make a gamble on something new?
Yeah, I think that is one of the biggest challenges for us as a market maker and a liquidity provider on CeFi and DeFi. In the end, it's always an opportunity cost. So you decide on, oh, we are going to implement blockchain A, but in the meantime, something else is happening, or so it's a very difficult move that's happening, right? Suddenly Solana was boom, it was there, right? Like with all the meme coins, and you decide whether you're gonna jump on the train or whether you let the train go by and you focus on something else. And so for us as a market maker, it's a very difficult balance that we need to find. So we always have a finger on the pulse on what is happening in the market, right? What are the narratives playing? What layers are being interesting, and especially for us, because we are so close in the market, we kind of see these volume moves from one chain to the other, or from one coin to the other even, and so that is something we keep an eye on internally. Make sure that we see these shifts happening. But then it's another thing to actually see if you want to invest human capital into integrating these chains. And that's a very difficult balance that we always have to make. And some are winners. We've had the winners where we integrate and we're first in those chains, and it's amazing to be in that space. But we've also, for example, Solana, we missed that ball, not this run, but the run before. It was a gamble that we took, right? And okay, that we missed that ball. So it's these kind of things that it's always a give and take. And it's a difficult balance for us. I think it's, besides the risk management, it's probably one of the most difficult ones, because it's also on, you have capital on the chains, right? Which is also a counterparty risk for us, right?
Yeah.
So it's so difficult. So that's a bit how we approach it, and we do keep an eye on it, and we, on a 2-weekly basis. So every 2 weeks, we internally with some key personnel check in on, like, hey, what are the shifts that we are seeing, and how does that impact our technology? Mainly, obviously, on DeFi. So yeah, that's how we approach it. Yeah.
Yeah, that makes perfect sense. And yeah, I feel like that would be the hardest thing for me, just figuring out where's the market going, how do we hit it at just the right time so you're not losing the opportunity cost. And it's
Exactly.
tough. It's tough. And then you have, something like Stacks where network gets delayed 3 months and then you're like, ah, great. Now we're sitting on this for 3 months. So all the volume is
Exactly.
waiting. So yeah, that's
Yeah.
tough.
Well, it's, for example, with Stacks, it's quite an amazing technology that they're building out, right? It's super interesting. So that also passed our desk, and it's like, should we or shouldn't we, right? And it's so hard to. It's a gamble that you kind of need to take, right? Especially when, we're not with 200 people here, right? We're a shop of close to 50 people. So every person that you deploy is capital that you're losing somewhere else.
Yeah.
Yeah. So that's a challenge for us for sure.
Yeah, no, I can definitely imagine that. So, I guess when a project does come to you and ask, why should we choose you guys over, a Wintermute or something like that, what is your pitch to them? How do you guys differentiate from other providers that might be doing somewhat similar things?
Yeah, no, that's a very good question, and it's a question we get often. One of the key things that we stand for is trying to be as transparent as possible. So what does that mean is that we need to agree on what is liquidity, right? Like, and how much liquidity you're providing. It's the same like 2 questions ago, like you said, like how do you measure liquidity, right? Like these are the things that we really agree upon and make sure that we're transparent on. So making sure we report properly on it. How much relative volumes are we covering? How much relatively order book that we are covering 24/7, making sure that we report on it. Creating that transparency I feel is something that we stand for, and we also differentiate compared to others within also European context, which I think is super, super interesting. We really are doing everything that we can to comply with the upcoming MiCA regulation, and making sure that we can still stand our grounds within the European context, which is a very unique thing on its own, right? I think a regulated cryptocurrency market maker in Europe, it won't fit in one hand, right? So that's something that we stand for and really work with, and making sure that we are transparent also to our own regulator, which I think is also important, because these token projects come to us, but like what do we represent towards others, right? And that's our own regulator that's checking on us, right? So I think those are very crucial on our end, and making sure that market making is not a black box. I think that's also something. It's in line with transparency and being ethical. You know, making sure to explain what market making is, and what is possible and what is not possible. Manage the expectations of a market maker, and explaining what it does is absolutely crucial. And I, I put that in let's say the highest regard for myself, is making sure that we are transparent about it, and not being a black box.
Yeah.
Yeah.
So what would you say are like some common misconceptions about market makers that you sometimes need to correct people on?
Most projects, and luckily I'm not involved in these calls anymore. But a lot of projects, the market maker, it's like a holy grail.
Yeah.
You hire a market maker, and suddenly, for some reason, magically, your price is gonna go up. You have $100 million of volume and all these kind of things, but that's not how it works, right? A market maker can only work if there's actually trading volume, but a trading volume can only work when there's market maker. So it's really a chicken and the egg thing. So this holy grail conception that very novice and newbie projects have is something that we've seen a lot, and that we really need to educate heavily on. I think that's one. I think two, a very big misconception is that a market maker creates volume. That is actually not the case. Like I mentioned, market maker needs volume in order to make a market. We can make a market, and But if nobody's trading it, if nobody's interested to trade it, then there's no volume. That's the reality. And so that's a very big misconception that people have is market maker is there and hope we have volume. No, that's not how it works. If you have a trading community and you have a market maker, that's a win-win for everybody, because now your trading community can start, day trading it, or when they want to enter a position long term or short term, they have the liquidity to go into it, and not when they want to enter a position, they need to spend 10% higher slippage to get into a position, which is horrible for a trading community, for investors, and so on and so on. And then, the third and the last one is the pump and dumps, which is something I absolutely hate and really don't like to see. They have these conceptions of a market maker, they come in and boom, market's going to go 50x, 60x. So I don't know where people get it or what they smoke, but that's not how it works. Not at all. And that's also something, let's be honest, it's not something we want to be part of. It's not ethical. A market needs to move in an organic way. And so those are the three things that we see often. I think the first one is something that we see most, is like the holy grail. I think then it's the suddenly the arrival of hundreds of millions of dollars of trading volume. And then three is these pumps and dumps that people expect a market maker is doing, but yeah, we're not involved into that at all. At least not at Kairon Labs.
Yeah, no, that makes perfect sense. And I think a lot of those misconceptions, I feel like half of it is just hopium. Like people in the
Yes.
Discord are like, just wait till this happens, everything's gonna be great, and everyone is just, waiting on that. But then I think there are some
Exactly.
real world examples. Like I think I saw something about Floki, and they were like, how did Floki, pump up to like billions of dollars when no one I know owns it or shills it or cares? And they started to figure out, kind of things that were going on in the background, and especially once they pulled out, I think the floor kind of fell out below them.
Yeah. So I think like you mentioned, I think we have seen situations where we are announced as a market maker when we are not even involved into the project, right? And they use this like, oh, it's Kairon Labs and Mark is gonna pump. We don't even know the project, right? Which is funny but sad in a way. I think that's one. I think two, indeed, right? There are some coins that suddenly have very big price swings, high volatility, caused by not by a market maker, at least not by an ethical market maker. But this is something that we have seen, and of course gives a bad name to market makers, which that's the problem, right? There's so many misconceptions, then these things happen, and then they feel like market makers are involved into it. But a lot of people are forgetting, we are, the decent market makers, they're based in a very legitimate country that have regulators eyeing them, right? We have employees that we pay, and, regulator is not just like this. We've seen the FTX event. Well, you could say the regulator was doing that, but in Europe, it's really not the case. And we've been contacted already a few times, multiple times, by the regulator for them to understand what we are doing, and so that is something a lot of people really misunderstand, and I don't blame them, because they suddenly see these things, and that's fueling the hopium, right? You have suddenly a coin, wow, it's pumping, and oh, who's the market maker, and suddenly random names are being thrown out there, and then market maker. Oh, Kairon Labs is a market maker on this coin too, and so it's gonna pump. We're like, we have no idea where this is coming from. So yeah, it's rough, right? And to be honest, market makers are often seen as like the bad guys of crypto and price manipulation and so on, but actually, it's the complete opposite, right? It really is. So yeah, it's not easy. It's not easy for us to to come in the market. Yeah,
I believe it, but I think it's super important, and it's interesting that you guys can just kind of come in and provide that layer that in TradFi is just such a different process and a whole different world, and you're kind of
exactly.
inventing this industry, so I'm sure there's a lot of growing pains and a lot to
For
learn.
sure. Yeah,
I
for
guess,
sure, for sure.
do you have any examples that you could talk about maybe of like projects where you're like, this was the perfect setup, or this was exactly what we'd like to look for, and the exact thing where we can set you up for success, I guess. Like what is the template for a project that you can best set up for success?
Well, first of all, what's the definition of success? Of course, I
Yeah.
think most token projects, success equals to positive price action, which is not wrong per se, right? I think it's just the way
Yeah.
that success or that price action is achieved is a whole different thing. So
If it's sustainable.
exactly. So I think that's one. I think two, it's what is crucial is what is currently the macro state, right? I think, let's be honest, crypto is a full risk on investment, right? Even Bitcoin is a full risk on investment. Although many crypto natives like us see as Bitcoin as a, oh, it's a safe haven, right?
Yeah.
But for a lot of retail people, it's not, right? It's scary. It's new. It's volatile. Let alone go into altcoin markets, right? So that's the second thing, is the macro circumstances need to be stable, which today is not the case. We have enough geopolitical issues in Europe, in Asia. Currently the US government and elections are coming our way, which is also causing disruption in macro climate. So those are very crucial things to first start with. And then secondly, it's the long-term play. Success is defined only by long-term. The hit and run is never a success, right? As we know, and this is also what exchanges very properly feel. I think Binance have been a very good example of these long-term plays and making sure that projects are also invested into a long-term. So understanding the choice of tokenomics and the choice of exchanges are for us a crucial thing. So that's a very crucial aspect in being successful or not. Tokenomics together with proper exchanges that are there for the long term and that are also very legitimate in terms of, not having price action expectation, right? Being very clear on, we list you because you're a good project, and you can have access to our user base, which is quite significant in itself, right? You think about it, how much time and money has been invested into having access to such a user base and being allowed to give access to being given access to that amount of community. I think that's quite crucial, and those are, let's say, the crucial aspects in being a success. I think the last one, and that's something we've seen in crypto in general, is the narrative, right? What is the narrative of a project? Is it AI? Is it meme? Is it DeFi? Is it social fi, etc., etc.? Is it layer 1, layer 2, layer 3, layer 0, whatever? That's always a very crucial aspect, and that's actually one of the most difficult things, right? Because let's go back a year or 2 years, and then AI, or 2 years ago, AI wasn't AI, and then actually we saw a lot of projects passing our desk and like, oh, we are an AI project, and we're like, AI, nobody cares, right? Like
Yeah.
it's not something we would currently invest into, but if you look at it, if we would have invested in it 2 years ago, it would have been, let's say a golden ticket, right? So
Mhm.
it's understanding a bit also on what the market is going through, right? What is the narrative shift that is happening, and making sure that you're, as a token project, are prepared for that too. I think those four are very crucial to be successful. The narrative is mainly on midterm success, I feel. The meme hype, or the AI hype that was like very, very short term, very midterm. And then, the three other aspects are crucial for a long-term success, in our opinion. Yeah.
Yeah, that makes perfect sense. So, are there any narratives that you personally are really bullish on, that either are recent or maybe old ones you could talk about, that you were always bullish on? I guess personally, what are you excited about going forward with crypto?
I always say DeFi. I always say it. Although, it's been a bit more, DeFi has been a bit less sexy.
Mhm.
But I feel DeFi is still it's still the narrative of crypto. Decentralized finance. That's what it's all about, right?
Yep.
So that's where I'm still a very firm believer of, and I still feel there's so much to be done, also from compliance and regulation point of view, but also from a product point of view. There's still a lot of innovation that can happen and that will happen there. So DeFi is, for me, always the answer, to be very honest. I think it's for me almost a no-brainer. That it's one of the reasons that I kind of moved into crypto, and I think a lot of people say it, but actually fundamentally crypto and blockchain is about decentralization, and crypto is a financial system on its own. So decentralized finance is something to be very enthusiastic about, and something I'm very enthusiastic about. And lately we have seen more products that, on-chain T-bills, for example. I think
Yeah.
that's super sexy. Removing the middleman is amazing, right? Like, I think that's going forward, and making the financial system more performant, and being a challenger of more traditional finance, very complex systems into place. So DeFi is, for me, the answer. And I think on the side, Kairon Labs also obviously looks at GameFi. I think gaming in general and crypto have always been this very
Yeah.
interesting match, and I think a lot of projects miss the actual tokenomics around it, and try to invent tokens, while in in, in theory it's not really necessary. You have on-chain stablecoins, which is perfect.
Yeah, you
So
got NFTs for skins. You got all the pieces right there.
exactly. So yeah, so I think that's something, because I come from a gaming background, that's something that I'm super enthusiastic about, and it's a bit my passion. I think from a professional point of view, DeFi is where I believe in, and those are the main two things that we look at Kairon Labs, and I also look at personally. Yeah.
I definitely agree with you there. I think I love DeFi, but I hated Ethereum, so now I love Bitcoin DeFi. I'm like, yeah, just put all my favorite stuff together, easy money,
Exactly.
and the
Exactly.
GameFi too. I messed around a lot with Star Atlas. I thought that was a really
Okay, cool.
noble attempt to really take it to the next level.
Yes.
I knew the guy that
Yeah.
founded it, and he was
Oh,
just a
cool.
really straight up guy. But yeah, I think that's
Yeah.
the direction we need to take it in. Just make these AAA games that are as good, but make it exciting by
Exactly.
adding some monetary incentive to it. And that's how Vitalik, said he got into ETH. He was just playing, I think it was World of Warcraft or League of Legends or something. He was just pissed off he couldn't transfer his items around.
Exactly.
So that's the core of
Yeah.
it.
Exactly. Exactly.
But yeah, I think all that's coming. It's all, the setup is here, and I'm glad that you guys are around to support these projects and help them get to where they need to be to showcase it to the world. So thank you so much
Yeah.
for coming on and demystifying this stuff for people. I think this is always confusing, but just hearing from people like you who are, clocking in every day. It helps a lot just to put a face behind the name of these things and better understand it. So I appreciate your time.
It's been an absolute pleasure, and thanks for the insightful questions.
Absolutely. And thank you all for listening. We'll be back soon with another episode. Have a great one.